The first week of June is going to be highly volatile. Crucial macroeconomic data will be published in the United States and other countries in the next few days. Risks may also increase because major central banks are due to make their decision on the interest rates. The Bank of Canada will announce its decision on a Wednesday. The ECB will make its statement on a Thursday. And today, markets found proof of real Forex interventions by the Bank of Japan. Earlier, the regulator had delivered the message about such determined auctions. According to a report by Japan's Ministry of Finance, more than $62 billion were spent to support the yen. Tokyo entered Forex twice, on April 29 and May 2. Nevertheless, the market sentiment for the dollar-yen pair remains unchanged. Since the gap in interest rates between the United States and Japan is still huge, therefore today the yen got stuck close to its 4-week low of 157.70 against the greenback. The same level was recorded last week. However, Bank of Japan Deputy Governor UCHIDA also said that the fight against deflation is coming to an end, so wages will likely continue to rise. The latest data showed that Tokyo core inflation rate accelerated to 1.9% in May from 1.6% in April. But it's still significantly below the Bank of Japan's target of 2%. The Chinese yuan is extending its weakness in the early June. The thing is that Chinese companies registered abroad needed to pay dividends to the overseas shareholders. Therefore, they literally flew to the market with the yuan. In turn, the yuan depreciates against the US dollar and other currencies. The report by CAIXIN released today showed that China's manufacturing sector gained momentum in May, but the market gave a muted response. The CAIXIN China PMI rose to 51.7, besides the figure exceeded forecast and recorded the fastest growth rate in almost 2 years. No wonder the US dollar index is advancing on the back of the yuan's depreciation. But the main drivers of the greenback's strength are found in the economic calendar. The US dollar finds support from domestic economic data. The statistics released last month was very mixed. To sum up, the data in May indicated a cooling American labor market and moderate deflation, that's falling prices. As a result, the value of the US dollar relative to its 6 peers lost 1.56% in May. And today the dollar remains broadly stable, trading within the intraday corridor between 104.50 and 104.80. As for the stock markets, investors have found new catalysts for risky assets. On Wall Street, for example, all 3 major indexes posted strong gains for the month. The S&P 500 added 2.3% in May. The benchmark stock index opened in June higher, trading within the intraday corridor of 5,191 to 5,280 points, while traders believe the US Fed Reserve will be able to cut rates later this year. Stocks will continue to rise and the US dollar will hurt by selling pressure. The single currency remained calm today. The euro-dollar pair was trading sideways in the first half of Monday. However, despite the increased volatility, there are still no radical changes in the main currency pair. It has been locked in a narrow range of 1.0789 to 1.0895 for 3 weeks in a row. The instrument has been oscillating between 1.08 and 1.09 in a regular pattern. Softer than expected inflation data in the United States and the hotter than expected inflation data in the Eurozone helps the euro stay afloat, especially on the back of the growing risk-on mood. The annual CPI in the Eurozone accelerated to 2.6% from a 2.4%. The data published last week was a catalyst for the euro's rally. As a rule, any policy decision has been already priced in by the market. What are the odds that rising inflation will be able to fundamentally influence the ECB policy decision? The ECB is holding a policy meeting this week, and most analysts expect a rate cut in the Eurozone by a quarter percentage point. Our analysts believe that even if the regulator does not change anything in its monetary settings at the meeting on June 6, this will not change the overall picture in the euro-dollar pair. In any case, the ECB will begin to lower interest rates earlier than the US Fed. Meanwhile, the psychological effect is working in favor of the euro, and it may grow a little more due to inertia. As soon as traders realize that the ECB will begin cutting interest rates earlier, the US dollar will regain its strength. Today, oil is unable to take advantage of the US dollar's weakness. OPEC and its allies announced plans to gradually phase out an additional 2.2 million barrels per day of cuts, and this will happen over the course of the year, from October 2024 to September 2025. In May, oil prices sank by 6%, and it seems that this is not the limit. After all, black gold is under pressure from high interest rates in the United States. Under such fundamentals, economic growth is set to slow down, thus reducing oil demand. Bearing in mind all these factors, the Brent price dropped below $82 per barrel, but also got close to the 80 level. This price stumbled due to sharply increased volatility in the oil market. Crude oil had been trading for a long time in a narrow range from $82 to $84 per barrel, but in the last days of May, this range was disrupted. The price began to actively break through the borders, sometimes above the below the specified range, and the market has already accumulated momentum because the price cannot remain in the same range for a long time. This process is always accompanied by a certain volatility. However, it's still not clear where exactly the market will move on. Given the ongoing overall bullish trend of the US dollar, the Brent price is likely to trade in the lower range of $80 to $82 per barrel. Indeed, the market cannot stabilize immediately. During this time, prices may rise a bit. You have watched the market review on the InstaForex TV channel. We wish you profitable trading and see you soon.